Hey, fellas, what's going on?
What's going on, Todd?
That's why we called you, Todd. We want to know what's going on.
Now, Todd, if I could lead the question here, I've been dying to. I want to lead off with a question here. I want to get your take, and I asked Alan Brockstein a similar type question pertaining to Aphria. I wanted to get your take on it because it seems to be some leaching into the sentiment down on the American side, which you're most concentrated in, although your fund, you own stocks on both sides of the border. Are you starting to see a leaching in of negative sentiment south of the border with the Aphria situation? And if you could just give us your overall take on what you're seeing there and what you're looking for, and perhaps whether you're a buyer if certain benchmarks appear, stabilization benchmarks appear in the future.
Yeah, no, it's certainly not helping. There's a lot of U.S. banks that I think are ready to roll out coverage of the Canadian space and the U.S. space as the banking comes through. And I don't think there's a legal department on Wall Street right now that's feeling real good about that, considering that Aphria was really considered one of the chosen one. Right? That was a safe one. It had New York Stock Exchange listing. It had institutional holders. It had analysts researching the stock. Now, I can't speak to the allegations. I don't know the allegations. I think that the silence is deafening from the company, and that's probably one of the main things that's really weighing on this. I remember in the great financial crisis, Bear Stearns went down, a lot, and they blamed the rumors and the short sellers. And I said at the time, if rumors can move a stock that much, how strong is that company? And I think that's the question right now for Aphria. But Matt Bottomley, who's pretty good over at Canaccord, signs I think a $13 valuation for the Canadian assets. I think at the very least, you get a sum of the parts play here. So I'd be more bullish than bearish down here, in the abyss. But we have a small trading position. That's it.
Very good.
What are some of your favorites, Todd, in the space?
Well, we like the U.S., it's been wrong, but we like the U.S. Players in front of what we think is just a number of catalysts coming down the pipe. And, we've seen what happened to these RTOs that came public, whether that's the Curaleaf or the acreages or the Crescos or the Harvests of the world. I think once all this indigestion works itself through and people look at valuing these things going forward, we saw the Cura stock buyback today, which was a bit astounding, but nonetheless, by our pencil, this company could do 400 million in next year and almost double that the year after. So you're talking about buying 5 times 2019 revenues, 2.5 times 2020 revenues. When there are Wall Street analysts and they do the work, we think they're going to like what they see.
Now, Todd, since we're talking about Aphria, do you think one of the problems right now is the market's digesting just what to believe on the analyst side right now? Considering there's a fair market opinions based on assets that were transferred from Aphria and others, based on, say, the Canopy growth full year revenues from GMP Securities, which end up being, an overestimation. Now, granted, factors were involved for that cut to happen. But do you think there's sort of a crisis, or maybe not a crisis, but do you think there's some skepticism in terms of what can be believed in terms of full year revenues, in 2019, 2020, and that's sort of leaching into, and people are just not buying it and selling off stocks until there's more visibility?
We talk about this a lot. The risk in this space is the duration risk, right? You're basing these companies on 2019, 2020 numbers, and it's only 2018. So you have the soft underbelly of vulnerability here. Yeah, you could point to some catalysts, but on a pure numbers standpoint, you're looking at companies that are valued at $1 billion, $2 billion, and they've done peanuts this year in revenue, and of course you're going to roll your eyes. But this is a bumpy rollout. This industry is coming back online after a 90-year hiatus and a lot of misinformation. So of course it's going to be bumpy. Build outs and rollouts are never sexy per se, but it's laying the groundwork for the next 5 or 10 years. If you're buying these companies on this quarter or next quarter, I think you're going to be disappointed. If you're laying into positions for, I think, the next 5 years and the companies that are going to really emerge as winners, I think you're going to be very, very well off. And that's what we're trying to find here.
Interesting. I noticed yesterday Tilray still over over $100, and the Dow was down 800. Do you think it's significant if Tilray stays above 100, or does it matter? I mean, well, it's. I think the last time I looked, the market cap is still $7-8 billion, and it came out at what, $17? So it's still a very big winner in the space.
Yeah, no, that's certainly been a confounding issue. I mean, we were sitting here thinking internally, we don't have a position in Tilray. We had some for a while. We sold it when we got, we thought, fairly valued, or a little bit above that even. But we've been sitting here wondering if the rest of the cannabis tape could hold up while Tilray, trades to a more reasonable multiple. And instead, you've seen Tilray hold up while the rest of the space has just gotten creamed. So I have no insight. I know it's a closely held company. We'll see what happens when more stock comes to the market. But there are babies with the bathwater that are being tossed out there. I think you just need to do your work and be a little bit patient. I mean, it's bloody out there, but there are babies in that bathwater, and that's what, this is where the opportunities are if you can do the work.
Yeah, and the fact that the Dow was down 800 yesterday, and this is maybe not just on the marijuana space, but looking ahead. Are we going to hold here? Are we going to trade? Are we? Some of our people argue that we're still very early in this monster bull market. What's your view on that? Have we seen the top? These are difficult questions. I'm just looking for your opinion, Todd.
Yeah, no, I don't mind difficult questions. I think that as I look at the tape, I look through the world markets. I look through the sector markets. For the U.S., I don't see much that's very good, to be honest with you. I was talking about this yesterday with somebody. It's a market of stocks, not a stock market. So when you start to see big components and leadership components fail, and now at the very least, you might be putting in some pretty ominous-looking head and shoulders patterns across the S&P and the NDX. I think it's you're playing a dangerous game. I don't know is the right answer, right? I don't know what the market's going to do. I think anybody who tells you they know is full of shit. But I think I can make a case right now that the best days of tech are behind us. It's crowded. You have a lot of sellers on the way up. One of the things that we're looking at for cannabis, and of course, retail hands holding cannabis doesn't help with the volatility, but we think over the next 5 or 10 years, you're going to see a movement of the institutional money into the cannabis space, because that's going to be where the growth is, and that's where we see it going. But for the broader tape, I don't see much to get excited about. You got some performance anxiety into year end, but there's some really, really ugly looking charts around the world, so it's prudent to be a little careful until that resistance clears.
Okay, and I know we've talked about this on Twitter. I think my position on this, that it appears that we're in the end of a bull market cycle. It's gone 9.5 years, second longest on record. Now, that being the case, if we are entering a recessionary period where the market could get hit, does CB1 Capital put on the brakes in terms of the positions that they have? Will you end up hedging some of those positions against, say, shorting the SPYs or the Qs or whatnot? Or do you kind of put the brakes, or do you just look 5 and 10 years ahead and say, what, we don't know where the bottom is. We are just going to buy because we think in 5 or 10 years, Curaleaf or Ianthus or whatever our big positions are going to be at X value?
It's a great question. I mean, we hedge our book insofar that we'll take 1 to 5% of assets and keep them in non-correlated hedges, S&P, SPY, or Q hedges, put spreads as the case may be. But that's really as a buffer more so than as a pair. But we will raise cash. We have for the last couple of months taken money out at the beginning of the month in anticipation of maybe some softness. But to your point, I can't tell you when, these catalysts drop, and I can't tell you necessarily, when the market will start to price in the forward catalysts, be that the Farm Bill, be that banking reform, be that UN resolutions, be that New York and New Jersey coming online, all of which are expected to happen, all of which are net bullish and the beginning, I think, of a great investment cycle here. So, we're buying weakness in the names that we think are right, and names like Ianthus, names like some of the MSOs that we talked about, and understanding that we could be early and we could be early for a while, but There's, like I said, there's no institutional research out there on the U.S. side. So we're doing all of our own work here and making a bet that when the analysts from Wall Street come in and do the work, they're going to see what we see. These companies trading at 2.5, 3 times 2020 revenues and just a tremendous growth in the space. And I think the space is misunderstood. People look at the flower and they see an end product. We look at the flower and we see an ingredient. So we don't think that optionality is reflected. We don't think the efficacy is reflected. But all of that has to come through the pipe. And until it does, you got short sellers all over these names and nobody really able to defend it because revenues are still a year out on the horizon.
Very interesting.
Great answer.
Todd, thank you very much. We're gonna wrap it there, and always appreciate your comments. It's it just here in Canada, sitting here in Toronto, it feels so. I can't help but feel a little sad to be honest with you. It just looks. I think we're going to find out a lot of answers here the next few days, or hopefully we do.
Yeah. Again, it was nice to meet you, Todd. Great insight.
Let me say this, Ed, because I think it's.
Go ahead.
Yeah, can I say one more thing?
Yeah, absolutely.
Absolutely.
Yeah, so there's just a lot of despondency out there. I mean, people who I've sort of befriended over the years on Twitter are just sort of throwing the white flag in and saying it's all over. I mean, the euphoria 6 weeks ago had these things 50% higher, and the despair now I don't think is consistent with the opportunities that are out there. It's just, again, you need a little patience. We like to say keep loose grips on the handlebars here because it's going to be really bumpy. But this is the beginning of the cycle. This isn't the end of the cycle, and for whatever that's worth, that's how we're approaching the forward price action.
Yeah. No. Okay. Thanks,
awesome.
Todd.
Great. Thanks, Todd.
See you later.